Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Dean Fabro. Dean is a Vice President and Manager of the San Jose main branch of the Bank of the West. He's worked for 43 years in the banking business, and his experience includes commercial lending, wealth business development. He was a wealth business development officer for First National Bank Central Coast, and he was a regional manager with major banks including Bank of America, Great Western Bank, California Federal, and Citibank. These banking business people really move around. Anyway, Dean is currently on the loan review committee for the Opportunity Fund, which is based in San Jose, and he's married, has 5 children and 9 grandchildren. Congratulations, Dean. And thank you for joining me today. Today, Dean and I are going to be talking about small business financing. So this is your chance to get the insider's view, how a banker looks at financing for the small business. So Dean, why don't we just get started, and what is the state of the banking industry today? We've got a little bit of a moving target. I think things sound like they're getting a little better. Maybe you can tell us a little bit about it and how it relates to the small business community.
Well, I think after the financial meltdown that began in 2008, it was discovered that credit risk was not being managed as well as it should have. So banks have become more back to basics in their credit evaluations and how they underwrite credits and small business loans. It's still very challenging because a lot of the smaller businesses still have the issue of maybe showing a couple of years of profitability. So while we've noticed that an increase in the number of loans being made, it's still very challenging in getting those loans approved because of the various liquidity issues. Startup businesses are having more of a challenge finding financing because of what they bring to the table. They don't always have all the technical skill or the management skills to run a new business. They have the technical skills, and finding that blend to make it work is very challenging.
Okay, we'll get into that in more detail a little later. By the way, folks, just to let you know where we are right now, when we recorded this, it's February 7th, 2012, and so it's about a year later from the last time that Dean and I met and talked about some of this stuff, but thought we'd also talk about, like I said, how things are changing a little bit out there. All right, well, there's been things in the newspapers talking about basically, the banks were being very tight as far as making any loans. It seems like the banks were more interested in buying other banks than than helping out small business people. Is that still true, or is that true, or maybe you can tell us something about it?
I think the mergers and acquisitions have slowed down, but the regulators are monitoring those banks that are maybe at risk. So I think moving forward, you're going to see additional acquisitions at the request of regulators to merge in some of the banks that are struggling on the loan side. But I think that creates other opportunities for small businesses that maybe would not be provided them otherwise. But I think because of the changing climate on loans and how much more compliant banks need to be in managing that risk in their loan portfolios, I think there's always going to, we're kind of back again to the basics of how we used to make loans years ago. There's no longer, I guess, the term, that loose money is no longer out there.
Okay. Well, then let's get back to some of those basics. Let's talk a little bit about what it's all about. So how does a bank evaluate the creditworthiness of a small business? What are the underwriting criteria when they're looking at whether they're going to make a loan?
Well, when someone comes to us and applies for a loan, and I think this applies across the spectrum with all major banks and community banks, is what do their financials look like? I think a small business in today's environment needs to have professional CPAs preparing their financial statements, quarterly statements. We want to see their cash flows and their liquidity. Are their assets good? Do they have aging receivables that maybe may come under question if they are so aged that they're uncollectible? So I think, we need to know, are they cash flowing? Are their assets in excess of their liabilities? Profitability, it's kind of a word that's kind of gotten lost in the last few years, but if you're profitable, that hopefully tells us that they have the means and ways to pay back the loan.
So I guess that's the bottom line: is if we lend this money, is it likely to be paid back?
Right, because I think banks, they're lending the money of their depositors versus lending funds from investors, and that's a big difference between a lot of the banks and where people can get their loans.
Okay. So what is the general thought process that a lender has when making a business loan?
Well, we like to see that they've had at least a couple of years of profitability. Do they have, some marketing plans and business plans in place? I think business that can demonstrate they have a direction. They are managing their resources. They're not retaining earnings to put back into the business, rather than continually drawing from the business, say, for their own personal use. I mean, that becomes a question in assessing a loan viability. Is are they putting money back into the business? And then we also want to make sure that the guarantors, that they are managing their own personal business in a manner that would represent how they might manage the business. A lot of times, and more frequently than not lately, we're getting the question, of I'm getting a loan for my business, why do I need to be the personal guarantor? Well, if you're not willing to guarantee your own business's loan, that's a big question mark. Why, if something were to happen, we couldn't come to you as a personal guarantor as a secondary repayment source?
So maybe you could explain a little bit more about that then, because, so one source that you're looking for really, as you said, is hopefully the business is profitable, and so it's generating enough that the small business owner can have an adequate income for themselves, but also leave something on the table for reinvesting in the business and for paying off this loan.
Right.
And so in addition to that, though, then you're looking for these loan guarantees and what's behind it. So what are you looking for as far as the guarantor is concerned?
Well, the guarantor, they have to have some resources available to pay back the loan if the business is not profitable. And that seems like a very sort of a basic, again, getting back to basics. We're lending you the money as the owner of the business. If the business goes a little sour, we would expect that you would be the repayment source. So, we want to look at the guarantor's credibility as well. So if they haven't demonstrated in their personal business accounts how to manage business, that leaves a big open question as to how would they be managing the finances and the direction of their company. And a lot of times, small businesses, there may be 2 or 3 owners, so we would need more than just 20% of any of the ownership needs to be a guarantor on the loan. So we have various avenues of repayment sources.
And we were talking a little bit about this before we started this interview, that some of the business owners, it seems like, have been hesitant about giving these guarantees. You've been experiencing that?
Yeah, a little more frequently in just the past year, since we did this last year. I've come up against a very viable and profitable business, and at the last moment, the owner says, I don't understand why I need to be a personal guarantor. And we get back to that point again, that why would you not want to guarantee the business that we've lent you money on? It's your business. And they were afraid that, well, then we would be getting into their families' best welfare. But there is that marriage of, I think, as a guarantor, the responsibility to repay the loan if the business starts to sour, or And in today's environment, we still have these ebbs and flows in the economy. One bad quarter can be disastrous for the entire year of profitability. So I think having guarantors to secure the loan reduces the risk for us, the lenders, the banks.
Okay. Now, why would a business owner choose to work with a community bank instead of a large bank? So when I say a large bank, most of us think of like Wells Fargo or
Sure.
Bank of America. And then I guess Bank of the West is sort of a regional bank. And then there are some community banks as well. So why would a person choose one type of bank over another to work with? Maybe you can explain a little bit about that.
Well, I think the larger banks provide greater local access depending on the nature of the business. Some businesses maybe are only located in one spot, so a community bank might appeal to them. A smaller business that's got locations, say, throughout the state of California, the larger banks would provide them the more locations to do their banking.
Community take a deposit in or whatever.
Absolutely.
Yeah.
Of course, that is somewhat minimized in today's environment because all banks, community and large banks, have these remote deposits where you physically never even have to come into a bank to physically deposit a check any longer. So that can mitigate, that. But the community banks price a little differently than larger banks. Community banks have resources to monitor the formalized lines of credit and loans, where the larger banks have a different approach to reviewing the loans much differently, and the pricing is different. So, the choice between a community bank and a larger bank, it can be just, hey, it's close to where I live, and that's where I bank. But again, community banks sometimes can make a decision much more quickly than the larger banks because they have the powers to be close at hand. And the downside would be maybe the restrictions and risk of making a loan at the community bank might be a little greater for somebody coming in for a loan, where the larger banks have greater resources to minimize the loss factor, because most banks look for at least 1% or less in charge-off. So a larger bank can absorb that much more differently than a smaller community bank.
Right. And of course, a larger bank, I would guess, if you've got a larger business and they have greater needs, well, then a larger bank could finance probably a bigger loan.
Absolutely.
And so on. But maybe with a community bank, again, obviously you're the type of guy that somebody could talk to, but they're thinking a little bit. A lot of it's relationships. Right. Yeah.
And I think also another point to be made: smaller businesses today are doing banking on the international market. Larger banks have overseas kind of facilities in place to accommodate that, versus community banks that aren't quite as international. So again, you have to weigh the pros and cons of what your business needs and find out what fits best for you.
Okay. All right. Well, let's say that you're starting a small business and you can't qualify for a loan. So what alternatives do these people have?
Well, I think, and that's probably most new businesses and startups is, I have an idea for a business to manufacture a product or provide a service. I may have the technical expertise, but maybe not the management expertise. But going along with that management expertise is, how am I going to finance it? It might require that you borrow funds from friends and relatives. But the downside to that is, I would expect if I was lending money to my brother-in-law to start a business, I want a piece of the business, part of the equity. There's also SBA lending and SBA loans, which are government guaranteed.
Small Business Administration.
Small Business Administration. You can get up to 90% financing and some pretty decent terms. But with SBA, you've got to come in with a very defined business plan,
Mm-hmm.
a marketing plan. I think they want to know that you have financial support with a certified public accountant that's going to do your taxes and your returns for you. We're looking for that maybe more sophistication than we did 10 or 15 years ago, because again, with the high risk factors involved and the closer monitoring by the federal regulators, I mean, we want to ensure that we're minimizing our risk, but also allowing small businesses to become entrepreneurs. And I think there are still a lot of resources out there. Private investors, they can be found, but that can get very expensive. So the Sba loans are still a very good avenue. And just in the past year, that was probably 75% of our loan business at the branch that I manage is Sba associated.
Yeah, quite a bit. So I think part of this is I'm thinking back on different occasions in my life and so forth, and actually a guy that I ended up going into partnership with, he talked about an experience that he was actually talking with some other people in our firm at one time about starting a CPA firm. And so they were throwing around ideas, and he said, okay, now let's talk about putting up some money. He said, so how much can each of you put into the pot? And it turned out that they didn't really have much to put into the pot. He was the only one. And so it helps to have a partner that has some resources, to help you to get started. And like we said, a family member, or if you can find an investor that may have some interest, an angel investor or something. But you have to be fairly creative, maybe, in coming up with these ideas, because when you just have an idea, it's hard for a bank to justify, because they don't have a history.
And I think that kind of leads to something I was thinking about before we started taping, was a lot of startup businesses, day one, they don't get a check for something they've either manufactured or a service they're providing. The first paycheck may be months down the road.
Oh, yeah.
So you need to have those resources in place. You may have payroll to meet for the first couple of months. Obviously insurance, rent on premises.
Mm-hmm.
Sometimes those things get lost in the excitement of starting a business. Yeah, I need 3 to 6 months of capital in order just to sustain the beginning of the operations, because there's overhead that needs to be covered. And it may be 6 months down the road before you're starting to show any profitability.
Yeah, and if you've got a very ambitious operation, it may be a lot more than that. And so that's why Facebook, I mean, is an example, I guess, that they had to get a lot of venture capital backing, and it took a while for them to develop a model that would generate revenue.
Absolutely.
For this and for these internet-based things that are dependent on advertising and so forth. I mean, that's really the case. There has to be a lot of thought in how to finance this whole thing. That's part of the reason why we're talking about this. All right, well, let me get this next question in, because it sort of revolves around this, and that is, what if a person has an idea for a new business? Is this a lost cause?
No, and I think just go on the point we were just discussing, is it's not a lost cause, but they better have a plan, a written plan,
Mm-hmm.
Some marketing strategies.
Mm-hmm.
If it's a one-person business, it's going to be far different than if you have employees, because you have to manage their welfare. A lost cause, again, going into business is, I think a lot of us have at one time or another have thought of going into business, and as you just mentioned, all of a sudden, where's the money?
Mm-hmm.
So, it's got to be well thought out, and I think you, before a step is made to open a business, you confer with, there's a lot of management consultants out there, CPA firms, and people like yourself that can advise on those things that need to be in place in starting a business of any size. because too often, again, we see people who have the technical expertise but no management expertise or financial skills. So in today's environment, to be successful, you have to have both. And if you're fortunate enough to be a large enough startup business, you're going to have somebody that's dedicated to the finances of the company, someone that's going to be managing the day-to-day people issues, HR, and then somebody that's going to direct the production or the services that you provide. So, it's very difficult for a small business to start up with just one person driving it. I think there's too many resources out there that are useful in giving you guidance and direction and telling you whether, I think we see this as a viable direction to go, or, you're blowing smoke.
So there's a couple of things that I wanted to go through as we hopefully wind up here before too long. So one is let's talk a little bit about the skills that a person needs when they are starting a business. So part of the problem is that there are many people who go into business that maybe shouldn't be going into business in the first place. And so they're working in an operation. The good example that a lot of people throw out, for example, is let's say somebody is really good at cutting hair for pets, for dog grooming, and so maybe they're very good at that and they do a great job, and they've been doing it with somebody else, and they're thinking, well, this person's getting all the money, why shouldn't I be getting it? And so they decide that they're going to open up the shop, but they need to know an awful lot more than how to groom a pet in order to do it.
Absolutely.
So why don't we talk a little bit about what some of those skills are that they really need?
Well, they need to know how to, they got to have a location to do this. Is it going to be out of their house? Are they going to do it with pet grooming? There's a lot of these mobile services. Are you going to have to go out and purchase a van? Are you going to need to rent commercial space? Do you know how to negotiate a lease? There's going to be insurance that you're going to need to purchase. Taxes, what are the business taxes going to be on this? So I think, again, you take the full spectrum of any business, and you've got all these various parts of the business, the financing, management. Are you going to need to hire additional people? All of a sudden now you got a payroll issue.
And management issue. Now you got to manage those people.
Absolutely.
And then you may have never done a payroll before. Are you going to hire a payroll company? Are you going to have a bookkeeper or accounting firm that's doing it, and so forth? You've never kept accounting records before. So now you need to understand something about accounting or hire somebody that does it. And whenever you hire somebody to do it, it's expensive.
Absolutely. And I think in today's environment, successful businesses market themselves successfully. How do you market yourself? Is it paper ads? Everybody can almost design their own website. How are you going to draw in new clients?
Right.
So I think you have to have some marketing expertise, or go find people that can help market your business and sell your product and service.
Yeah, I'm actually reading a book right now. It's called Ready, Fire, Aim. I don't know if you've heard of it. It's by a fellow named Michael Masterson. And he talks about different stages of a business. And he talks about the infancy stage, the first stage. And basically what he says is the business owner needs to understand 90% of his time needs to be devoted to sales and marketing. And the most important thing for them is making that first sale. And then, of course, growing it from there. So in other words, you have to build that customer base, and you have to do it fast. And if you don't, you're going to run out of money.
Absolutely.
And so, so people thinking that they're going to loan them the money in order to put together this idea is probably just a dream. So they're going to have to find that basic financing, but they've got to use it as efficiently and effectively as possible, become profitable as quickly as possible, build that client base and customer base, and then you got a chance of surviving. But if you don't have a chance. So anyway.
Well, just last week I had a gentleman walk in, and he had this fabulous idea for this development in the Silicon Valley. And the first thing I asked him was, can I see your business plan? How are you going to finance it? And I was getting these blank looks, and he was looking to borrow millions.
Yeah.
Now, either he's naive or, again, out in left field someplace, but I think his idea was doable, but the way he was going to approach it was far out of his capability and reach and comprehension. I mean, he would need a team of 5 or 6 key players to make something like that happen. But again, I mean, the guy was a very seasoned business professional, but he hadn't thought out the plan, far enough where we would be even able to entertain a loan, or even an SBA would not have flown. So.
Okay. Well, we only have a little more than a minute left, maybe. So maybe you'd like to throw out a final thought for our viewers related to this.
Well, I think the environment right here in the Silicon Valley for small business lending with most of the banks is very good right now. I mean, businesses, small and medium-sized businesses, some are getting that 1 or 2 years of profitability under their belt. There's still a little reluctance. Businesses have gotten their credit cleaned up. They don't want to take on any new debt at this time. But by the same token, they're looking at, if the economy should continue to show improvement, do I need to borrow now for the eventual, upturn? A line of thought that I always like to provide with a lot of businesses is, when you're able to get a loan, take it when you don't need it.
I see.
Because when you need it, it's going to be more difficult to pass the credit review and so forth, or analysis.
All right. Dean, thank you for joining me, being with me as my
Michael.
guest today. Folks, I hope that we've given you something to think about, at least to be aware of as you are dealing with these issues of small business financing. Banks are there to help you, and they also are a type of consultant to help along in the way. So we'll see you next time on Financial Insider Weekly.